traders. My name is Adam Harris, Chief Market Analyst, and my partner for this week is JT Markets. So let's kick off by starting to have a look, first of all, at euro dollar. Now, this is important. We're having a look at it on a monthly basis. It is still range bound. This is important because it has been stuck in a range going all the way back to July and June. So we're well into 6 months into this. And of course, what we're really waiting for ultimately is to see it all break out. Now, this is important because if it breaks out the bottom, we will see several months of euro dollar weakening, as well as some of the other majors, pound dollar, Kiwi dollar, Aussie dollar, if that's going to be the case, Aussie dollar, US dollar, that is. But if we break out to the upside, we will have a couple of months here at least of euro dollar. Now, this might be something, for example, that only triggers in January. So it could be a New Year thing, but it is possible also that we could see this happen between now and New Year's. So just this helps us because right now it means that there's not a lot to really trade with a high probability on any of the majors. But it does imply that once we get out of this range, there will be some very, very strong trends that we could take advantage of. And this is something we want to monitor on a weekly basis. Let's have a look at GBP here. So we're having a look, just go back to euro dollar here, show you this on a daily. What I do see here at this point in time is it does appear as though this trend has a higher low, is trying to turn around at the bottom of the range and work its way up. I do need to see it break this most recent high to get a confirmation of that. So that is going to be something that I will be looking for this week. Moving across and having a look at GBPUSD, which is currently in a downtrend on the weekly, but on the daily has now shifted into an uptrend. So again, the question is really the same as euro dollar, US dollar. Will we see this maintain its uptrend? So one of the parts that will be interesting is seeing it possibly come back to retest this level and continue upwards. That could actually be a legitimate buy opportunity in the early parts of this week. Could be a nice retest and a move to the upside. Kiwi dollar, US dollar is finding a nice level of support as well. If you have a look at it from a monthly perspective, there is a historical, really significant level where we are. We've got a very nice bullish candle currently forming. So the implication here is that we're going to see this move to the upside. And from a daily perspective, we've broken the downtrend. So again, we're looking for any kind of pullbacks here, and we could find some buy opportunities going down to the 4-hour, for example. We're already in an uptrend. We could find that the market does want to come back down, test this level. And again, there could be some nice buy opportunities. So this week, certainly what I'm looking for is a weaker US dollar and therefore stronger moves against that dollar. And quite a few of the majors will offer those types of opportunities. Moving on to dollar yen, it has a very, very good trend at the moment. As you know, the yen itself is weakening. Bank of Japan's not really that happy about it. And at some point, they are going to update policies or possibly intervene in any way they can. But for now, so far, the trend appears to be intact. So, for example, dollar yen, let's have a look at this. Bring in euro yen. You can see nice and bullish forming an ascending triangle at the moment, which is the momentum is good. Looks like it's leading towards a breakout to the upside. If we have a look at pound yen, any kind of a pullback here, again, we could see pound yen starting to move to the upside. Let's have a look at Aussie yen. Same thing again. We've just broken through a nice level of resistance. And again, we should have a continuation to the upside. And finally, let's have a look at Swiss yen, which has got some resistance up ahead. I beg your pardon. Let's get rid of that. Let's bring this in, which has got some resistance up ahead, but also is continuing to look bullish. So a lot of those yen pairs look as though they have upside potential. CADCHF. Very interesting, although in principle the Swissy has been strengthening, and so a lot of the Swissy pairs are almost inversely or inverse or the opposite of the yen pairs. We are seeing a lot of the Swissy pairs moving down, but something has changed with CAD Swissy. It's nice and overextended. It's got some very nice bullish candles at the moment. Let's just let this data upload. And so we've got some nice bullish candles here, implying that we're going to see a bit of a pullback this coming week. If we go down to the weekly as well, you can see we've got very nice double bottom. We've just about to break the high. If we go to the daily here, it makes much more sense. Nice level of resistance, which most likely will break through it. Beautiful double bottom, beautiful bullish divergence. There's a very high probability that in this coming future, we will see a break higher. And again, we'll have some nice shorter term buying opportunities probably this week and next week. So something to keep an eye on. Let's move on and have a look at gold. So gold continues to move higher. And I think this is very directly correlated with the global instability and global financial uncertainty. This is something we saw as we kind of went into the 2007-2009 global financial crisis. So if we just go back here, how much history have I got over here? Let's have a quick look here. Just showing you this. This is actually $1,000 an ounce mark. This is going back to 2007-2009 global financial crisis, and you can see that move towards an increase in or at least adopting gold or adding it to our portfolio. So we could see a very similar type of build. It broke ultimately and went through to 2011, hit the top of the bubble. Back then, this was the very first bubble I've ever experienced, and that ultimately burst. And then we can see gold came back down for a while. But if we look at where it is now, we can also see it's gone almost parabolic. And we've got global uncertainty at sort of the highest peaks it's been since World War II, believe it or not. And we are definitely overextended, but I'm not really convinced just yet that this has completely finished its journey. The momentum continues to stay bullish, and therefore I think it will continue to move up. But we do have some headwinds. We are going to encounter that resistance at $4,400 an ounce. And again, I don't really think this is necessarily going to go away until we see a change in the kind of global uncertainty. We've got a very strong bullish engulfing bar from Friday. So this week, my expectation is that we will continue to attempt to go higher, and therefore there could be some really good buying opportunities on any pullbacks for day traders. It'll be the same thing for silver. Really worth just pointing out here, if you look at silver, that we're at all-time highs. But silver, unlike gold, has actually only just this year has really kind of doubled in value and has only really started to break past its 2011 highs, whereas gold broke past its 2011 highs in 2019. So silver has some more upside potential, but there is also no doubt, by the way, this has gone parabolic. So parabolic just means that the angular momentum has become so aggressive that at some point when it does pop, which always happens, the correction will be quite aggressive. Okay, so the thing is that we could be months or even a year away from that. Okay, so in other words, if I say a year from that, that's 12 more candles. I mean, it's possible. Will we be keeping an eye on it here? We'll know, because we'll start to see some very, very strong rejections here. So when we see a massive red candle or very strong wick, that'll be an early sign. It'll give us at least several months warning that we're likely to see a correction. So it's times like these, ladies and gentlemen, that you really need to be taking trades with stop losses. If you're trading these days without a stop loss, you're asking for pain and suffering. You're asking for your account to get wiped out. So please do not trade without stop losses. If you're not sure where to place your stop losses, then there are lots of trading programs that will teach you where to place your stop losses. So there is very important that we do that behind our market lows, for example. The point is that this is very aggressive, but I'm not really entirely convinced that it is done anytime soon, and silver has lots of catching up to do. So it still looks good, but it is parabolic. That's all I want to just kind of mention here. Let's have a look at crude oil. So interesting, because there are, and again, these are, let's call it appearances that the US is kind of on the verge of starting a war with Venezuela. And the only explanation for that appears to be oil. So this is pretty much it. Natural resources under attack. So we'll have a look and see how that goes. But the reason I mention that is that we might see a little bit of activity starting to trickle into this. And sorry, just wanted to hide that window. But overall, the longer term trend going back to 2022 has been a downtrend. So we have this general downtrend on crude oil, which will be the same for Brent, by the way. Brent is highly correlated, like 98% correlated. So I'm just going to show you the US one, which is West Texas Instruments. Just showing this one, we can see that it is generally hitting low. If we look from a weekly perspective, we're working our way down to the next major level, which is about $55. And I can't really see any reason why they would change, but I am just warning you that it is possible that there could be an increase in volatility if we see that there is some kind of an attack on Venezuela. And here you can see a lot of buyers coming in here. So of course, as crude oil gets cheaper, it becomes more attractive to buy. So it's kind of cause and effect. But let's be clear as well, the overall longer term, medium term, and shorter term trends are down. And so the momentum is to the downside. All right, let's have a look at the global indices. Now, we had an incredibly strong finish last week. Really, really bullish, very strong. The overall weekly trend is looking very good. And so my expectation this week is that the markets will attempt to continue to move the markets higher. Let's have a look at the S&P. Beautiful. Now, what we need to talk about what we need to point out, or what I should point out here, is that the market has pulled back, broken the most recent low. So what does that actually mean? It's a very subtle indicator, but it means that this bull trend is starting to wobble. All right, it means that the market is starting to slow down. Now, here's the thing: it's a weekly chart, so this could be something that takes several weeks, Could be another month or two before we start to see it, but this is a very, very subtle kind of a stumble within the markets. We've currently got what's known as a hanging man that's forming. We're a little bit overextended away from the moving averages. And so basically what's on the table now is that this trend is slowly potentially going to roll over. Now, it could be something that is bullish up until January, and then we see a bit of a correction in January, and we are still in a bull market. Let me be very clear. We are still very much in a bull market, but there is a bit of a stumble here. It could just be letting off some of that buying pressure, and it's going to continue upwards. And I'm going to be keeping an eye on it here. We have time. This is very unusual that we'll see a market. It doesn't, I mean, the last time in 1929 where there was 1 week in particular where everything just fell apart over 1 or 2 weeks, usually it takes several months. So this is going to be one of those things where I expect that we will have time to see the market continue up and then possibly wobble and slow down and turn around. We'll see. But for now, the market is still bullish. Okay, there are no signs of weakness just yet, other than the fact that I said that there's just this little dip over here, which shows that it is kind of slowing down. We can see here as well, nice level of support that came back and got tested again. But the market recovered, rebounded. So in other words, at this point, what happened was it simply let off some of that buying pressure and it's good to go again. Right, FTSE, also looking good, really, really good. In fact, this is unusual. And all the time that I've been doing this, what I am seeing now that is different from before is that non-US markets are managing the wobbles that are happening coming out of the US a lot better. In the past, if the US got the sniffles, everybody else got a cold, right? Everybody else got sick. That isn't happening anymore. And I'm not completely saying that if anything happened with the US economy, it wouldn't impact the rest of the world. We couldn't potentially have another global depression. Of course, that's a possibility. But what I am saying is that there is something different about the markets at the moment. Outside the US, the markets do not necessarily wobble as much as the US. And in fact, the UK, the FTSE has been enjoying brand new highs. Excuse my dog, who's decided to bark at some passing stranger. There we go. The whole house is kicked off. But what I do want to say is the quality of this trend is indicative of its actual strength. And we've got a beautiful swing low here. We've got a little bit of headway that we have to break through here, but I expect that the markets will attempt to continue to move high this week. What we could see happen is the market hits some resistance, pulls back, and we even possibly have a nice buying opportunity to get into the markets. But if you're wondering if the markets are bullish or bearish, right now the markets are bullish. That is the answer. Let's have a look at some let's go further east and let's have a look at the HK. Let's have a look at Hong Kong, the Hang Seng, still wobbling. And so for a weekly chart here, it's been stuck in the last 6, 7, 8 weeks, been going sideways. And again, as we go in towards Christmas, ladies and gentlemen, please, there's no trading between Christmas and New Year's, right? So none of the big institutions, none of the big fish will be operating between Christmas and New Year's. They will be skiing in France or they'll be on their yachts in the Mediterranean, but they will definitely not be working during that period. So we'll actually see the markets potentially slow down, and that could be all that's going to happen. We're going to see the markets maybe go sideways for a couple of weeks and then generally just either kick off or correct. And so that's something we will be watching here. That's why I'm saying you want to be making sure that you're watching each of these episodes so that it gives you a good sense of what to expect in the coming week. This week, Euro, beautiful. So what I wanted to demonstrate is that all of the indices had a really good finish last week. They're all strong. They're all testing off support. The momentum is bullish. The question is, this week will we see a follow through? And probabilities and the quality of the trend say that yes, we will see the markets attempt to push higher. And now, again, just to kind of wrap this up, even Spain, look at this. Spain is having its best period since the 2007-2009 global financial crisis. It is in extremely good shape. And so it's only now just going to all-time highs for itself. So what I'm saying here is that right now, a lot of the markets are just catching up. They're just turning bullish. And so the implication technically here is that there is still bullish, there is still kind of some upside to the markets, and that we might still have a few weeks of correction, a pullback here and there, but that there isn't necessarily any fear that has come into investors. And always remember that the stock markets right now are more disconnected from the actual economies than they have been. They go through periods where they can be highly correlated and periods where they're not. This is one of those periods where it's pretty much just spare cash, tax cuts for corporations, tax cuts for uber wealthy. This is spare cash. This is wealth, and that's what you're seeing. But there's no fear. So right now, there seems to be a high degree of confidence in the markets and that they still have upside potential. So it's possible that although throughout the next year, between now and the end of 2026 or even 2027, we will still see, aside from occasional corrections, we'll still see further upside. Then let's deal with what happens after that. But right now, the economies and the markets are still maintaining that there is further upside and more potential and more appetite for risk. Right. That being said, I'll leave you with this. Please trade responsibly. Listen, have a good week. As I said, we've got some good possible trades and trends on the week, even with the coming in the week with the dollar, as well as some of the yen. Gold and silver look nice and bullish. The indices look nice and bullish. There should be some really good day trading opportunities, as well as even possible swing trading opportunities for those of you who like to or who prefer to trade the higher time frames. All right, there we go. Oh, also one last thing I would add here is that there is going to be some US data coming out this week. There's some US news. So keep an eye on the economic calendar for day traders specifically. I want to make sure that nothing messes with you or nothing interferes with you getting to your targets. Just keep an eye. There's some US jobs data coming out. And as you know, the current US administration is not releasing that data, which is not really a sign of confidence. But they will be releasing some stuff this week. So just make sure you check your economic calendar so you know when this stuff is coming out, and probably avoid getting into any positions in the markets in the 2 hours leading up to that. And finally, one last thing, do not trade without a stop loss and keep your risk under control per trade. There we go. That's all from me. Thank you very much.